CMA aspirants from South India. As you all already know, Akash Agarwal Classes has launched for you all 100% English lectures in English for CMA Foundation students giving their examination in December 2025 and onwards. So here I am going to tell you how do you enroll in the batch. You just have to join our WhatsApp community, which is given in the link. Fill up the Google form again given in the link, and do download our mobile application Akash Agarwal Classes to access the notes. You all know the lectures which we are going to conduct will be 100% covered. There would be no subject which we are not taking care of. So we are going to take care of each and every subject, each and every concept. We are going to take MCQs for you. We are going to provide test papers. We are going to take live mentee sessions as well. Lectures which we are going to take for you all are 100% recorded lectures and not dubbed lectures. And you all know we have exclusive team ready for you all to teach you for your CMA Foundation December 2025 attempt for subject wise as well. And we are uploading the lectures on a weekly basis. All the important links which will be useful to you all are uploaded in the description box. Since we have many students who have cleared CMA examination at all the levels from Akash Agarwal Classes, and to reciprocate the love which we have received from South Indian students, we are here for you all taking lectures 100% in English, so that we can clear your CMA Foundation December 25 attempt together. So keep studying, do watch all the lectures till the end, and do show some love by liking the video, subscribing to the channel, and putting up a word in the comment box. Keep studying. Bye-bye.
So hello dear my CMA Foundation students. Hope everyone is studying. So welcome back to Akash Agarwal Classes YouTube channel, and welcome back to your favorite subject, that is financial accounting. In this lecture we are going to start a new chapter, which is bank reconciliation statement. The name of the chapter is bank reconciliation chapter. Hope everyone is watching all the lectures of Akash Agarwal Classes, which is made only for you, that is South Indian students, right? And if you like the videos, if you like the lectures, please like the lecture. If you taking good input from the lecture, if you think that the lecture will help you in clear your examination, so please like the lecture and also comment the lecture, comment on the lecture, right? So let's start bank reconciliation statement. Bank reconciliation statement, there are three words, that is, first one is bank, another one is reconciliation, and third one is statement. So what we are going to study in this chapter, as you already studied the bank cash book with bank column, you already studied the cash book with bank column. Of that chapter we are going to take a reference of that chapter. With the help of that chapter we are going to study this chapter. Okay, so that chapter, if you did not watch the lecture of cash book, kindly watch the lecture before starting this chapter. Okay, it is also uploaded in our YouTube channel. So let's start bank reconciliation statement. What is the meaning of bank reconciliation statement? There are three words, one is bank, another one is reconciliation, and third one is statement. So remember that it is a reconciliation statement. And what is the meaning of reconciliation? Reconciliation means to match. We are going to match. Sir, what are we are going to match? We are going to match the balance of cash book. Sir, we studied that in a cash book there are two columns. One is cash column and another one is bank column. So which column we require? We require only bank column. Cash book, bank column with passbook or bank statement, which is issued by bank. bank statement or bank passbook is issued by bank. Okay, so we are going to match the balances of cash book and passbook. So why we are going to match? Because there is a difference in balance of cash book and passbook. So why there is a difference? That is the thing we are going to study in this chapter. Okay, and another word is statement. Another one word is statement. So remember that this question is important for objective. Bank reconciliation statement is a statement and not an account. Bank reconciliation statement is a statement and not an account, and not a part of books of accounts. Part of books of accounts. Accounts. It is prepared. This is a statement. It is prepared by a company, by a business organization, by a business entity, and not by the bank. Bank reconciliation statement is prepared by the company, business or organization, any organization. They are going to prepare bank reconciliation statement, and not the bank is going to prepare bank reconciliation statement on behalf of you. Okay, so sir, why we prepare this statement? When we prepare this statement, this statement is prepared by any entity as per their wish. If company wants to prepare by monthly basis, they can prepare on monthly basis. If company wants to prepare it quarterly basis, they can prepare on quarterly basis as per the wish of the company. Okay, organization. So let's start. Bank reconciliation statement. It is not a part of books of accounts. Okay, so let's go ahead. So there is a person, Mr. X, who has a bank account in a HDFC bank. Mr. X has an account in a HDFC bank. Okay, so Mr. X is a person whose accounting we are going to do. We are the accountant of Mr. X. So he has an account with HDFC bank. He has an account with HDFC bank, right? So which account we are going to make on behalf of Mr. X? The accountant is going to prepare cash book on behalf of Mr. X. The accountant is going to prepare cash book on behalf of Mr. X. So we are going to prepare cash book. And HDFC bank. HDFC bank is a banker of Mr. X, because Mr. X has an account in HDFC bank. The bank of Mr. X. Okay. So bank will maintain, banker will maintain passbook or bank statement. Bank statement, right, which represent Mr. X account in the books of the bank. So it is an account of Mr. X in the bank, in the books of bank. So we also when accountant prepare books, and it is a X books of accounts, and if in the books of Mr. X, accountant prepare Mr. A's account, so same like that in the books of bank, bank prepares X account, right? So this transaction is going to happen. Sir, okay, we know that, sir. But sir, why there is going to be a difference And why we have to prepare bank reconciliation statement? Why we have to prepare bank reconciliation statement? Answer: why there is going to be a difference in cash book and passbook. So first thing, why we prepare bank reconciliation statement? To know the balance and the equality between the balance of cash book and passbook. Because if my cash book says that in my bank column there is a amount of rupees 1 lakh, but when I receive the bank statement from bank, I see that there is a amount of rupees 1,50,000. So there is a difference between cash book and passbook. There is a difference between cash book and passbook. There are various reasons. There are various transactions. Because of that, there is a difference between cash book and passbook. There is a difference between cash book and passbook. So we have to find out that what are the reasons. Because of that, there is a difference in cash book and passbook. There is a difference in cash book and passbook. Okay, remember one thing, that bank reconciliation statement is prepared by the account holder. Bank reconciliation statement is prepared by the account holder. By the account holder. Remember that. This is also important for MCQ question. MCQ question can be asked on this. The BRS is prepared by the banker, account holder, owner of the business. So it is prepared by the account holder or accountant of the account holder. Okay, remember that. So why there is a differences in cash book and passbook? The reasons of differences. Between cash book and passbook. So there are two major reasons. First one is timing difference. Okay. Sir, what is the meaning of timing difference, and why because of timing difference there is a difference between cash book and passbook? So why there is a timing difference in cash book and passbook? Remember that. Okay, suppose take an example. Mr. X received a check. On 13th March, and he deposited same check on same date, but bank collected the money. Don't write this. Bank collected the money on 3rd April, because there is a bank procedure. Whenever you deposit check in the bank, whenever you deposit the check, it takes 2 to 3 days to clear that check, to get the amount of that check, right? Because why, sir? Because there is a involvement of clearing house. Whenever you deposit, this is your bank, HDFC Bank. Whenever you deposit the check with HDFC Bank, this is your check. Whenever you deposit the check, the HDFC Bank also send this check to the clearing house. Suppose this check is prepared. You receive this check from Mr. B. You receive this check from Mr. B, and Mr. B has an account in ICICI Bank. Mr. B has an account in ICICI Bank. So what will happen? Your bank will deposit this check to the clearing house. Clearing house will go to the ICICI Bank and will check that Mr. B has a sufficient amount to make payment of this check. After then, clearing house will collect the money from ICICI Bank and deposit in my account in a SDFC Bank. So it takes 2 to 3 working days. 2 to 3 working days. So, sir, what kind of difference made in this because of this transaction in our books of accounts? So, accountant is going to record the transaction on 13th March. Accountant is going to record the transaction on 13th March, and bank will pass the entry. Bank will record the transaction on 3rd April. So there is a difference in dates. Sir, is the accountant wrong while doing entry? No, accountant is not wrong while recording the entry. Sir, is the bank wrong while recording the entry? No, bank is also not wrong. Both the parties are correct, because until and unless amount is received by bank is not going to create your account. And until and unless, whenever you receive check and you deposit the check in the bank, on that same date you pass the entry that amount is received. Okay, so there is a difference between dates. When I receive the bank statement of 31st March, I am not going to see this amount which is received from this check. I am not going to see this amount in bank statement, because this amount is going to be reflected in my in my passbook on 3rd April. So that's why there is going to be a difference in balances of cash book and passbook on 31st March. So this is the reason. This is called as timing difference. Another example of timing difference is when you issue check. Mr. A issued check of rupees 50,000 to Mr. B on 13th March, but Mr. B presented this check in his bank on 5th May. So he presented the check on 5th May. His bank has received the amount from our bank on 5th May. And when we recorded the entry on 13th March. We passed the entry. We recorded in a passbook, in a cash book, in bank column, that payment is made to Mr. B of rupees 50,000. But the actual payment is made on 13th March. So there is going to be a difference between cash book and passbook. There is going to be a difference between cash book and passbook because of this transaction. Both the parties are not wrong. Right? So this is called as the timing difference. Okay? So write it down. Why timing difference arises? Due to difference in the dates of cash book and passbook. Dates of cash book and passbook. Okay. When entry is made in cash book, the entry is made in cash book on the date of transaction. We record the entry in cash book on the date of transaction, and entry is made in passbook on the date of actual receipt or payment of the funds. So when actual payment is going to be made or actual receipt is going to be made, on that date entry is going to be made in passbook. So that is the reason there is a difference between cash book and passbook. There is a difference between cash book and passbook. Another reason is error and omission. Right? Error, mistakes, omission. Forgot to record the transaction. So there might be errors or there might be omissions. Error, mistakes while recording the entry. It is called as error. And omission, we forgot complete transaction to record. So it is called as the error and omission. Error or omission can be made by the part of cashier, that is bank, or it might be in the part of accountant, that is the holder of account. So there might be difference, there might be error or omission in cash book, or there might be error or omission in passbook also. So we have, because of the error and omission, there is going to be difference in cash book and passbook. So we have to match this cash book and passbook. So there is going to be difference because of error and omissions. So write it down. Error or omissions made in recording entries in the cash book and passbook. Okay, so if wrong entry is made in cash book, if there is an error in cash book or there is an error in passbook, we can rectify this error by preparing adjusted cash book. We also studied the rectification of errors. We also studied the chapter rectification of errors. Okay. So error in cash book can be rectified by preparing adjusted cash book. So remember that this question can be asked for objective whenever there is a error or omission in a cash book. So it can be rectified by preparing adjusted cash book. But whenever there is a error in passbook, we cannot prepare adjusted cash books because it has to be rectified by the bank only. So for that, till bank makes correction in this transaction, we show it in a BRS, bank reconciliation statement. So we have to show this error until and unless bank rectify this error in a bank reconciliation statement, so that we can match our cash book and passbook. So that is the reason we have to prepare bank reconciliation statement. Okay, I hope everyone is clear till over here. Just give the heading of timing difference. Put the heading timing difference. Okay, so why there is going to be a timing difference? We are going to see the examples of reasons behind the difference in cash book and passbook because of timing difference. So first one example which already have seen. So make a column particulars when we are going to record the transaction in cash book and when we are going to record the transaction in passbook. Okay, check issued. First one is check issued but not presented for payment. So we have issued the check. When we are going to pass the entry of this transaction in cash books as on the date when the check is issued. Entry is made on the date of issue of check. Okay, and when we are going to record this transaction passbook on actual payment, entry is made in passbook when actual payment by bank is made, right? So there is going to be a difference in cash book and passbook. Another one example is check deposited but not collected. Check deposited but not collected. We have deposited the check in a bank. So when we are going to pass the entry in a cash book, we are going to pass the transaction on date of deposits of checks, and when we are going to pass the entry in a passbook, when bank is going to pass the entry in a passbook on the date of receipt of money, the day on which bank receives the money, on that date bank is going to be pass the entry in the passbook, on the entry on the passbook. Okay, so let's go ahead. Okay, just give the heading, next heading, nature of balances. This is also most important heading, nature of balances. So what are the example of errors and omission? We already studied the rectification of errors chapter. In that chapter we also seen that there can be errors and omission. So what errors and omission there can be? There can be a error of commission. While recording the transaction in a bank column of cash book, I recorded the transaction in cash column of cash book, right? When there is a receipt of 6,000, I recorded it as a 60,000. This is a error and omission. So because of this transaction also we have to make the bank reconciliation statement. So what is the meaning of nature of balances? So we are going to study the nature of balances. Okay, nature of balances. So there is a cash book and there is a passbook. Whenever I say that there is a amount of mine in a cash book, there is a debit balance of cash book. Cash book also have debit balance and credit balance, and passbook also have debit balance and credit balance. Okay, whenever I say I have my money, my own money in my cash book, it means it is a asset for me, and it is a debit balance of cash book. It is a debit balance of cash book, right? When there is a cash book has a debit balance, it means there is a my money in my cash book, right? We hold our money with bank. It is an asset for me. It is a asset for me. But at the same time, when I deposited the money with the bank, that amount which bank has, that amount is not bank's own money. It is my own money, and it is a liability of bank. It is a liability of bank, because bank has to repay that amount to me. Bank has to repay that amount to me. It means it has a credit balance. It has a credit balance. It has a credit balance, and it is a liability of bank and not mine. It is asset for me and liability for bank. So bank and liability. So whenever you are going to say that, there is a debit balance in cash book, there is a debit balance in cash book, there is going to be a credit balance in passbook. There is going to be a credit balance in passbook. Okay, we will continue. Just a second. So okay, whenever we say there is a debit balance in cash book, there is a credit balance in passbook. At that same time, there is a credit balance in a passbook. Sir, why? Because it is a liability of the bank towards customer, towards us, right? And whenever we say there is a credit balance, there is a credit balance in cash book, that is our liability. Sir, how there can be a liability? You already studied in a cash book that bank column can also have a credit balance. It means bank provides the overdraft facility, and overdraft is a loan for us. Bank provides overdraft facility, and it is a loan from us, loan for us, right? So when bank provides the overdraft facility, when there is a receipt of 10 rupees in my bank passbook, and when I make payment of 12 rupees, so bank provide 2 rupees overdraft facility, bank provide 2 rupees of loan to me. So it is a liability for me. It is a liability for us. Okay, it means we have taken a loan from bank, which we have to repay, the loan. Okay, but at that same time, bank say that as bank has given the loan, so it is an asset for bank. It is a asset for bank, because bank is going to receive the interest and principal amount of that loan from us, right? So it is a asset for bank, okay, because we have taken the loan from bank. I hope everyone is clear till over here. This is the most important part. Whenever there is a debit balance in cash book, there is a credit. At that same time, there is a credit balance in passbook. Whenever I say debit balance of cash book, there is a credit balance of passbook. Whenever I say there is a credit balance in cash book, it means there is a debit balance in passbook. Whenever I say, or question says that there is a debit balance in passbook, it means there is a credit balance in cash book. And whenever we say there is a credit balance in passbook, it means there is a debit balance in cash book. Okay, there are some examples, some transactions which are going to help to solve the questions in this chapter. So what is the meaning of certain words? Whenever question says debited in cash book. Whenever question says debited in cash book, it means debited in cash book, it means there is a receipt. There is a receipt or inflow of cash. Sir, why we have prepared this cash book with bank column? Whenever this is your receipt side. This is your receipt side or debit side. So when we say that there is a debit, it means we have received the money. We have received the money, right? So it means bank account in cash book is debited, right? Or transaction is recorded on debit side of cash book. Right? Whenever there is a receipt of amount in a cash book, we debit the cash book. Whenever there is a receipt of cash book, we debit the cash book. Whenever there is a payment, we call it as a credited. Second, credited in cash book. It means it is a payment or outflow of money. So it is called as credited in cash book. It means that there is a payment or the transaction is recorded on credit side. Recorded in credit side, right? Bank account in cash book or bank side in cash book has been credited. Okay. But whenever I say or whenever question says that debited in passbook, so passbook goes reverse of cash book. Whenever we say debited in cash book, it means there is a receipt, amount is received, inflow of cash. But whenever we say debited in passbook, it means outflow of cash, money. It is a payment. So whenever question says that the RAM account has been debited in the passbook by rupees 10,000, it means there is a payment from RAM account. And whenever it says that credited in passbook, it means there is a receipt of money or inflow of money. So whenever we say that, okay, whenever you deposit the money in your bank account, you receive the message. What message you receive? Your account has been credited by dash amount and your bank balance is dash. So when you deposit the amount or when you receive the payment, whenever we see this message, your account has been credited, that feeling is different. We can't express that feeling in words. Because there is a receipt of amount. But whenever there is a message we see in our phone that your account has been debited, it hurts so much. Because amount is gone from our account. So there has to be always credited your bank account. Remember that, not your cash book. Not your cash book. There has to be credited in passbook. Okay, so it means whenever we say there is a credited in passbook, it means that we have received the money, and whenever we say that debited in cash book, it means we receive the money. There is a reverse between cash book and passbook. Okay, I hope everyone is clear till over here. So how it will help to solve our questions, how this thing is going to be solve our questions. So remember that this is a cash book, or this is there is a passbook. So what we are going to do in this chapter, and how this things is going to solve our questions, we are going to see that. Okay, so sir, how the differences is matched and how the differences is find between cash book and passbook, how the differences is going to be find. So remember that this is your bank statement issued by bank. Suppose this is your bank statement. Okay, there are so many different columns. That is, one is date column also there is. Another one is particulars. One is debit, credit, the total, debit or credit. You can see that in your passbook, total, debit or credit, and the last one is balance. Okay, this is your bank statement, and there is your cash book with bank column. Whenever we study the chapter bank reconciliation statement, we have to see only bank column, and we don't see the cash column. Okay, so this is your cash book. This side is your receipt side, and this side is your payment side. Okay, so whenever I receive the amount from Ram, I will write it over here to Ram 10,000, and my passbook will also reflect particulars that they shows to self and to receipt. Their accounting is different, but for understanding purpose, I will write it down over here Ram. They will write it down is by Ram. Okay, so they are going to credit our account with 10,000. Total is also 10,000, and it is a credit balance. And how much balance is this? It is a 10,000 rupees. Okay, whenever I am going to make a payment by Sham rupees 5,000, they are also going to write it down to Sham in a debit side 5,000. The total is going to be a 5,000, and this balance is of credit balance. This is a credit balance because 10,000 is a credit. We have debited, we have reduced the amount. Also, there is a credit balance of rupees 5,000. Okay, this is kind of your passbook. But when I receive check from 2K show 5,000, but does not, I cannot see this transaction in cash book, in bank statement. I can't see this transaction in bank statement. Because of this transaction, there is a difference between cash book and passbook. There is a difference in cash book and passbook. Another one example is bank has debited bank charges. Bank has debited bank charges. It means bank reduced bank charges, certain bank charges from my bank account. For example, 200. But I did not receive the intimation about the same transaction. I did not receive the intimation. So I did not pass the entry of this payment in my cash book. I did not pass this entry. I did not show this payment in my cash book. So there is going to be a difference between cash book and passbook. So how we match in real life the difference between cash book and passbook? We put the cash book in front of us, and we keep the passbook in front of us, and we check the similarities and differences between cash book and passbook, and then we find out the reasons of the differences between cash book and passbook. So this is how actual method of cash book and passbook is, how rectification of error is made. Okay, but in this chapter we are not going to do this thing. They are not going to give us the cash book and they are not going to give us the passbook. They are going to give us the cash book balance or passbook balance. They are going to give us the cash book balance or passbook balance. And with the help of this balance, we have to find out another balance. We have to find out the another balance. So what it means, if question has given us the cash book balance, we have to find out the passbook balance. And if question has given us the passbook balance, we have to find out the cash book balance. This is how the rectification of error is made. This is how bank reconciliation statement is prepared. So if cash book balance is given, so what we are going to do to find out the passbook balance, we are going to add certain transactions, and we are going to minus certain transactions, so that we can reach out to the passbook balance, Okay, and same thing, if question has given us the cash book balance, we are going to find out the cash book balance. When question is given us the passbook balance, we are going to find out the cash book balance by adding or subtracting certain transaction. Okay, so we are going to see how we are going to find out, or how we are going to match the cash book and passbook by adding and subtracting certain transactions. Okay, so for that we are going to take some examples. First, we will take starting point as debit balance as per cash books. We are going to solve certain examples with the help of debit balance as per cash book, credit balance as per cash book, debit balance as per passbook, credit balance as per passbook. How we can find out the another balance. Okay, so there is given debit balance of cash book, and we, with the help of this statement, this thing is going to give you in your question. So they give us the debit balance as per cash book, and they will give us certain transaction. Question will give you certain transaction, and with the help of this transaction, you have to find out the balance as per passbook. It might be credit balance as per passbook, or it might be a debit balance of passbook. We have to find out that thing. Okay. For example, first example is a check of rupees 20,000 issued but not presented for payment. So we issued the check. We had issued the check. It means we made a payment. So to solve this transaction, these kind of transaction, what we are going to do? Question is going to give us the debit balance as per cash book. To solve this transaction, we are going to assume the balance as per cash book. So cash book has a debit balance, and in our assumption, we will assume that cash book, at the same point before this transaction happened, cash book and passbook has, whenever there is a cash book has a debit balance, passbook has a credit balance. We are going to assume that before this transaction, there is a similarities of balances of cash book and passbook. Similarities, it means the balance of cash book and balance of passbook is equal. Balance of cash book and balance of passbook is equal. Both are same. Both are same. For example, balances, initial balances is 50,000 credit balance of cash book and 50,000 debit balance of cash book and 50,000 credit balance of cash book. But when this transaction happened, we issued a check. It means there is a payment. There is a payment of rupees 20,000 from my cash book. It means my cash book is going to show the balance of rupees 30,000, but there is a no payment made from cash book, passbook. There is a no payment, but not presented for payment. So there is a no transaction recorded in my passbook. So my passbook is still showing the balance of 50,000. Still showing the balance of 50,000. So we have to find out this balance 50,000, and how we can find out that? By adding 20,000 in this 30,000. By adding 20,000 in this 30,000. So whenever there is a starting point of our cash book is debit balance, whenever there is a starting point is debit balance as per cash book, and we issue a check and it is not presented for payment, or whenever we record the payment in our cash book but it is not deducted from passbook, so we have to add that transaction. Whenever there is a starting point of debit balance as per cash book. Okay. Another one example is check deposited in a bank of rupees 10,000 but not collected by the bank. I have deposited, this is timing difference. This is your timing difference. So I deposited the check in my bank, but bank did not collect it. Whenever I say check deposited, it means it is a receipt. So I have deposited the check, and my initial balance, it is assumed. Balance is rupees 50,000 in cash book and 50,000 in passbook. 50,000 in cash book and 50,000 in passbook. So whenever I deposit the amount, it is initial balance. It is assumed balance. Okay, it is assumed balance. You can assume 1 lakh, you can assume 10 lakh, and you can assume 50 lakh. There is a no limit on your assumption. Okay, so initial balance is rupees 50,000, and I deposited the check. It means my balance of cash book is increased. So it is increased by 10,000. Cash book is showing 60,000. Cash book is showing balance of 60,000, but passbook, there is no transaction recorded in passbook. So passbook is still showing balance of 50,000. So what I have to do to the match the cash book and passbook? There is a balance of 60,000. I want the balance as 50,000. So what I will do? I will reduce 10,000. So I can get the balance of 50,000. So in previous transaction, we have added the 20,000. In this transaction, we have reduced the 10,000. We have reduced the amount of 10,000. Okay, so that our cash book and passbook is matched. So there is a starting point of cash book is 50,000. There is a starting point of cash book is 50,000. Right? But passbook balance is different. So to match this transaction, we have to reduce the 10,000. Okay. I hope everyone is clear till over here. We are also going to take certain transaction, other transaction. So for this question, we are going to assume starting point as credit balance, that is positive balance. Okay, credit balance as per passbook, as per passbook. Okay, you can solve all this transaction, all this question by any method for practice, for practice purpose. Okay, first transaction example: a customer directly deposited rupees 15,000 in our bank account, not recorded in cash book. Customer has directly recorded the amount in our bank account, but we don't know about this transaction. We have no idea about this transaction that customer has deposited the amount in our bank. Customer has deposited, it means it is a receipt. It is a receipt. Okay, there is a receipt of 15,000 in our bank account, but not in cash book. Not in cash book. So there is an assumption there is a cash book having balance of debit, because there is a passbook having balance of credit. As a passbook has a credit balance, it means cash book has a debit balance. Initial balance as 50,000, 50,000. Okay, 50,000 and 50,000. So there is a receipt in passbook. There is a receipt in passbook. Passbook is going to show the balance of 65,000. But cash book, there is a no transaction recorded in cash book. So it means that we are going to write 50,000 in cash book. What is our starting point? Our starting point is passbook. Our starting point is passbook. So we have to find out the balance of cash books. For that, what we are going to do? We are going to reduce the 15,000 from passbook, so that we can match the balance of cash book and passbook. So that we can match the balance of cash book with passbook. I hope everyone is clear till over here. Okay, let's go ahead. Example: bank debited rupees 7,000 in our account, not recorded in cash book. So whenever we say that bank has debited the amount, bank has debited the amount, it means that there is a payment. I told you all these things are going to help you to solve the questions. These things. Whenever there is a debit in passbook, it means outflow of money. So there is a payment from our cash book, from our bank statement, but we did not recorded this transaction in cash book. So we have to record this transaction. And because of this transaction, there is a difference between cash book and passbook. Because of this transaction, there is a difference between cash book and passbook. So we have to match this difference. And how we can match this difference? So this is your cash book having debit balance, and this is your passbook having credit balance. The initial balances of both of these accounts is 50,000 and 50,000. Again, I am saying that it is the assumed amount. Okay, bank has debited the amount. It means bank made a payment of rupees 7,000. Bank made a payment of rupees 7,000. So there is going to be a balance of 43,000 in our passbook, but there is a no entry of this transaction in cash book. So my cash book is showing the balance of rupees 50,000. I have to go from passbook to cash book. My starting point is passbook. So I have to increase the amount in passbook of rupees 7,000. Of rupees 7,000, so I can get the amount of rupees 50,000. So it is going to be match. It is going to be match. Okay. Another one example. Checks. You can try this same question as a starting point of cash book. If there is going to be a starting point as a cash book, so what we are going to do? There is a balance of 50,000. We have to reach out to the 43,000. So we are going to reduce 7,000 from 50,000. Okay. So you can try this thing also. Checks. Okay. Write it down. Next example. Out of checks issued for rupees 45,000, checks aggregating rupees 15,000 were presented for payment. Out of check issued, we have issued the check of rupees 45,000, but only amount of 15,000 checks were presented for payment. It means issued. It means there is a payment. There is a payment. There is a payment we have recorded in cash book is rupees 45,000, but there is actual payment from our passbook is rupees 15,000. From of rupees 15,000. So how we are going to match this transaction, right? Okay. So this is your cash book having debit balance, and this is your passbook having debit balance. Okay. Both of these having initial balance as rupees 50,000, 50,000. So there is a payment of rupees 45,000. I issued the check of rupees 45,000, but only checks of rupees 50,000, 15,000 presented for payment. It means that only 15,000 rupees is deducted from my bank balance in bank statement. Okay. So there is amount of 5,000 in my cash book, but my passbook is showing that there is an amount of 35,000. There is amount of 35,000 in my passbook. So my starting point, 5,000 is passbook. My starting point is passbook. I have to match this balance with this amount. I have to match this balance 35,000 with 5,000. So what I have to do? I have to reduce 30,000 from passbook, from balance of passbook, so that I can match the balances 35,000, so that I can match the balances of cash book and passbook. So I can match the balances of cash book and passbook. Okay. So we have to reduce the amount. Let's go see another examples. Starting point is your credit balance as per cash book. It means we have taken the loan. It means that credit balance as per cash book. It means that we have taken the loan. Okay. So let's see how we can solve these kind of transaction. Okay. It means there is a bank overdraft balance. Whenever we say that credit balance, there is a bank overdraft. And it means we have taken the loan. Right? From bank. Okay. So as there is a loan, as there is a loan, and if I makes the payment, if I makes the payment, the loan amount is going to increase or decrease. If there is a loan of rupees 10,000 on me, and even the loan I am going to make a payment of 5,000, so because of this payment of 5,000, the loan amount is going to be increased. Loan amount is going to be increased, right? And whenever there is a receipt, I say that there is a loan of 10,000 on me from my bank, and I have deposited 7,000 in my bank account. So the loan amount is going to be decreased. So now there is a loan of only rupees 3,000. There is a loan of only rupees 3,000. So remember that because of payment, the loan amount increases. We made payment. It means that additional loan is taken from the bank. It means that we have taken the additional loan. From bank. Okay. And whenever we say that there is a receipt, it means our overdraft balance is going to be decreased, right? Our overdraft balance is going to be decreased. Okay, so we made payment for reduce the loan, right? Okay, so let's see the example. When there is a starting point is credit balance as per cash book, okay. Let's see certain transaction. Example, bank charges of rupees 10,000 recorded twice in the cash book. Bank charges of rupees 10,000 recorded twice in the cash book. Okay, this is your cash book and this is your passbook. Both of these are having assumed balance, opening balance are 50,000, but cash book has a credit balance, it means passbook has a debit balance. Cash book has a credit balance, it means passbook has a cash book has a credit balance, it means passbook has a debit balance. It is assumed. Okay, so let's go ahead. What transaction happens? Bank charges of rupees 10,000 recorded twice in the cash book. There are bank charges. Bank charges is debited by bank. This is a payment. And because of bank charges, because of payment, our payment amount is increased. Our credit amount is increased. So what is our payment amount? What is our passbook amount? Our loan is increased to 60,000. Because before this transaction, we had a loan of rupees 50,000 and we also made a payment of rupees 10,000. Bank also has debited the bank charges of rupees 10,000. It means now the debit balance of passbook is 60,000. But while recording this payment, we recorded this payment in cash book, but as twice. It means we recorded first 10,000 and we also recorded later again 10,000. So there is a balance of loan, or there is a balance of credit in my cash book is rupees 70,000. So I have to match this cash book with this passbook. This passbook. So what I am going to do, I am going to reduce rupees 10,000 from cash book. So the balance is going to be match. Balance is going to be match. Hope everyone is clear. Everyone is understanding till over here. Okay. There are certain different transaction, other transaction, which we also have to discuss. We also have to understand these kind of transaction. Okay. So first transaction is different transaction. No? These are the example as a different starting point. So how we are going to deal with the when question give us the debit balance as per cash book, when question give us the credit balance as per cash book, when your question says us debit balance as per passbook, and when your question says us to the credit balance as per passbook. If question has told us the starting point is credit balance as per passbook, so what we are going to do, we are going to match this amount with this amount. So for that we have to add 10,000 in this amount. Okay, we have to add 10,000 in this amount. Okay, that's easy. So there are other certain transaction. There are certain other transaction also. So first transaction is cash book, debit side is undercast by rupees 10,000. Our starting point is debit balance as per cash book. Debit balance as per cash book is our starting point. Okay. So sir, how we are going to deal with this kind of transaction? Because by assumption we cannot match the cash book and passbook. For that we have to first understand what thing is going over here. Because we cannot say that our starting point is same. What we have to first understand, what transaction is happening over here. Cash book debit side is your receipt side. Debit side is your receipt side, and receipt side is undercast. It means receipt side is showing less balance. For example, this is your cash book. Okay. There is no difference. There is no timing difference. There is no error and omission in cash book and passbook. But in cash book, we have recorded to Ram. We have received the amount from Ram, rupees 10,000. So we have recorded to Ram 10,000. We have received from Sham rupees 20,000. We have received from Keshav rupees 50,000. We made payment of rent rupees 30,000. We made payment of salary rupees 5,000. Okay, and we have completed our cash book with 50, 70, 80,000, and by balance carried down is your rupees 35,000. 80 minus 35 is going to be, just a second, 45,000, right? 45,000. Okay. $45,000. But this is your balance of cash book. This has to be your balance of cash book. So it means there is a balance in your passbook is rupees 45,000. It means that there is a balance of 45,000 in a passbook is rupees 45,000. But while recording the transaction of Keshav, it is a transaction of 50,000, but we recorded it as a 40,000. It means the debit side is undercast. Or while totaling the amount, instead of 80,000, we calculated it as a 70,000. The effect of this is we have also balance carried down is rupees 35,000. Sorry, 55,000. We get the balance of, just a second, 75,000, sorry. We get the balance is rupees 35,000 rupees. 70,000 minus 35 is 35,000 rupees. We got the balance as per cash book is rupees 35,000. So the balance as per cash book because of this transaction is rupees 35,000. We have to match the both of the transaction. We have to match the transaction. So how we are going to match the transaction? If it has a debit balance as it question saying, so we have to add in this amount rupees 10,000. So we can match this. If our starting point is passbook as per credit balance, so we are going to reduce 10,000 from this amount, right? If there is a starting point as a credit balance as per cash book, credit balance as per cash book, we have to match this transaction. We have to match this transaction. It means there is a difference in credit balances. There is a difference in credit balances. We are going to add rupees 10,000, and while we are going from passbook to cash book, we have to reduce the amount of rupees 10,000. I hope everyone is clear. We have to solve this kind of transaction by this method only. This kind of transaction by this method only. So for that, what we are going to do? We are going to make a summary. For these kind of transaction, we are going to make a summaries. So what summary is going to be? When cash book debit side is undercast, it means that this is not going to be true while we are making credit balance. Okay, there is going to be different balance as per cash book because our starting point is going to be different. Okay, so this thing is not going to be correct. We are not going to add when we have starting point as a credit in cash book. That means when there is a overdraft balance, we are not going to add because this amount is going to be different as this side is going to be higher. Okay, so whenever there is a cash book debit side is undercast and cash book has a normal balances, so what it is stating that? It is stating that cash book has less balance than passbook. Cash book has less balance than passbook. Okay, when cash book credit side, it means payment side. Debit side. Let's see the debit side, both the things. Debit side is overcast. It means while totaling, instead of it is actual has to be 80,000, while totaling we have recorded it as a 90,000. So we are going to get balance is 55,000 and passbook has a 45,000. So overcast, cash book has more balance, just a second, more balance than passbook. Okay, when cash book credit side, that is payment side, is undercast, if we total this side amount is less, undercast, everything is correct. This is 80,000, this is 80,000, receipt side is correct, but while totaling it has to be 45,000. But while totaling the both of the amount, instead of 35,000 we have total it as a 30,000. It is undercast. While totaling we have to total it as a 30,000. So my balance carried down is going to be 50,000, right? As I total it as a 30,000. So when I say that my balance is 50,000, it means when cash book is undercast, credit side is undercast, it means cash book has more balance than passbook. Okay, and when I say that cash book credit side is overcast, it means cash book has less balance than passbook. Okay, so remember these things. And while the starting point is your overdraft, balance as per overdraft, so this thing is going to be a reverse. Okay, I hope everyone is clear till over here. Okay, just a second. Okay, I hope everyone is clear till over here. Let's go ahead. So this is long route of solving the question. I have a short trick for you. Okay. So what is short trick and how we can going to solve these questions with the help of your short trick? So the question is check of rupees 20,000. Our starting point is cash book. And check of 20,000 issued but not presented for payment. So suppose this is your cash book. Okay, you have to do that at your home. Left hand side is your cash book and your right hand side is your passbook. Left hand side is your cash book. Okay, whenever I issue the check, it means payment is made in cash book. So cash book is going to be reduced. So it means cash book is going to be reduced. But passbook is my constant. There is no difference in my passbook. So what we are going to do if my starting point is my cash book. This is left hand side is your cash book. Okay. So this is my left hand side and it is cash book. And as I issued the check, I showed it on a payment site and it reduced the balance. So what I have to do, I have to match both of the things. Cash book and passbook. I have to match the cash book and passbook. So to match the cash book and passbook, what I am going to do, I am going to bring cash book upward. I am going to bring the cash book upwards. It means I am going to make certain additions in my cash book. Right? So we are going to add whatever amount is given as per cash book. The rupees 20,000, I am going to add 20,000 rupees in that amount. Okay. Another example. Check deposited. This is cash book, this is passbook. Okay, again. Check deposited, it means the cash book goes upward. Cash book is increase. I have to come from cash book to passbook. So for that, I am going to downward or I am going to decrease the cash book. So I am going to decrease the balance of cash book. Okay. If my starting point is passbook. Okay, this is the example. A customer directly deposited 15,000 in bank account, not recorded in the cash book. So customer directly deposited, it means passbook goes upwards. My starting point is passbook and passbook is going towards the cash book. So for that, I have to reduce the passbook and I am going to reduce the passbook amount. Right? This is the short trick. But remember that this short trick does not apply for these kind of transaction. Okay. Let's go ahead. Let's see the transaction of overdraft. So whenever there is overdraft is reversal of normal balance. So remember that whenever question or whenever starting point is of overdraft, what we are going to do, if we have to add as per normal balance, we are going to make it reverse. It means if we have to add as per normal balance, we are going to minus from that balance in case of overdraft question. So how we are going to do that? Let's see that this question example. Bank charges of rupees 10,000 recorded twice in the cash book. Okay, there are bank charges. This is cash book, this is passbook. Okay, so because of bank charges, my passbook reduced by rupees 10,000 because bank charges charged by the bank, and also once cash book is also reduced. But while recording in cash book, I have recorded it as a twice. So my cash book is reduced twice in the cash book. My starting point is cash book. My starting point is cash book. So I have to go from cash book to passbook. From cash book to passbook. So what I am going to do? I am going to add. I am going to add the balance. But as this question is about overdraft, I am going to make it reverse. It means I am going to make it minus. I am going to make it minus. Okay. If my starting point is cash book. If my starting point is cash book, I hope everyone is understand. Everyone is clear till over here. Okay. So let's solve some transactions, some examples in your next lecture. In next lecture, we are going to solve certain questions from your study material. We are not going to properly solve because they are not going to ask us the proper question. We are not going to solve the questions, but we are going to see how the question they can ask us and how to solve the questions of bank reconciliation statement, because you are going to study the same chapter in your CMA intermediate examination. Okay, so we are going to do that, and also we are going to solve certain MCQ questions which are asked on this chapter. Okay, till that time, keep studying, keep watching Akash Agarwal classes to clear your examination. Okay, bye bye everyone. Thank you so much. Keep studying till your next lecture. Okay.